we're going to do this to interest rates. We don't know what they're going to do. We have no transparency. We have no idea if they're being corrupted or bribed or they're doing the will or the bidding of the government. We know the math of Bitcoin. Bitcoin is a very vast computer network. It is really the first commercial application of blockchain technology. And Bitcoin itself is a digital currency. It's a decentralized digital currency, so it has all the advantages of being different from traditional electronic currency solutions. And today, I would say it's really a store of value, the equivalent of digital gold, with long-term aspirations of being kind of that fundamental base layer protocol for the internet of value, or the as I call it, the trust net, where basically like the internet runs on TCP/IP. Over time, this exchange of value over the internet will run across the Bitcoin network. Blockchain is what you think about blockchain as the operating system. So the same way that DOS was the operating system for personal computers, TCP/IP is the operating system for the internet. iOS and Android are the operating system for the mobile net, how we're all connected on our little supercomputers. And really starting probably 3-4 years from now, the internet of value, where everything's connected, from our homes to our cars, to our brokerage accounts, to our wallets, everything will be connected through this operating system called blockchain technology. And the really simple way to think about it is it's just a triple entry ledger, right? In the old days, you had a single entry, right? I would lend you money. I would write down in my ledger how much you owed me, and you had to trust that I wrote down the right amount. Then the Medicis borrowed an idea from a monk over in Europe and created the banking system. And then the Rothschilds co-opted that. And today we have dual entry accounting, where if I want to send you money, right, I have to have a bank account, you have to have a bank account, but we need that third party, that trusted third party, the bank. Digital world, as we take money from an analog, pieces of paper or coins, to electronic, where it's ones and zeros, to digital. Now, the difference between digital and electronic, people say it's the same thing. No, very different. In an electronic world, we need that trusted third party. In a digital world, we can have a triple entry accounting system, which is essentially what blockchain technology is, where if I want to transfer $1 to you, we need a bank. If I want to transfer a Bitcoin to you, all we need is the computer network that runs on blockchain, this giant computer called Bitcoin. And I have to have an account. The computer says check, or the system, the network says check, Mark has an account. Then they say check, Chris has an account. Check, Mark sent his Bitcoin to Chris, now Chris has it. That prevents fraud, it prevents counterfeiting, it prevents all the bad things that can happen in the legacy financial systems world, financial institution world. And so as we migrate to this digital world, that's how blockchain and Bitcoin really are going to change everything we do. Every exchange of value in the future will be digital. It's absolutely a threat, right? Jamie Dimon calls it a fraud. Warren Buffett calls it rat poison. Charlie Munger one-upped him. He said it's like harvesting dead baby brains and trading those. Like, seriously, Charlie? Come on. So why do these guys say that? Well, 46% of Berkshire Hathaway is banks and financial system stocks. So the people in the financial world don't want this to happen, because it really does away with the need for the banking cabal. And, this won't happen overnight, but like any fundamental evolution of technology, it will happen, right? People said, oh, you don't need computers. And they're like, okay, fine, we need computers. Well, I don't need a computer in my house. Well, now we have computers in my house. Well, I don't need a computer in my pocket. And now I have a computer in your pocket. Well, I don't need to exchange value because I've got the bank. Well, eventually we'll have our own bank, right? Bitcoin will let you be your own bank, and it'll be more secure, more safe, and more global, fewer borders, and more security, because the network, the Bitcoin network, think about this. It's the most powerful computing network on the planet, and it's the most secure computing network on the planet. The question is, we can absolutely function like a traditional bank. So BlockFi, one of our investment portfolio companies, is an example of that, right? Blockchain Financial, BlockFi. You basically deposit your digital assets with them. They lend those assets out, much just like a bank would lend our money out when we deposit it, and then they pay interest. And you can choose to get that interest in cryptocurrency, either stablecoin or in Bitcoin or Ethereum. The difference is we can't make more. Unlike the fiat currency world where the Fed pushes a button and we get more money, the supply of Bitcoin is fixed and it will always be fixed. And so the value increases as more people, use it and adoption grows wider. So a couple things. So one, Morgan Creek Digital, we formed just about 3 years ago, and it's an extension of Morgan Creek Capital. Morgan Creek Capital is a registered investment advisor. We do traditional investing and alternative investments, big focus on innovation. And so Morgan Creek Digital focuses on the digital world and innovation in the digital world. So we have a venture capital fund, Fund 1, and now we're raising Fund 2 to invest in the infrastructure around blockchain technology. The idea is that if, or I should say when, Bitcoin reaches gold equivalence. And why do I say when? Well, if you think about currency, right? We have all these paper currencies. Most paper currencies eventually disappear. Governments overspend and you get a big deficit, currency gets devalued. 3/4 of the paper currencies in the history of the world have disappeared. So, the oldest one, the pound sterling, has been around for 380 years. And back 380 years ago, 1 pound note got you a pound of sterling silver, hence the name. Today, it takes 174 pounds of sterling silver to get a pound note. That's how devalued that currency is. A dollar from 1776 to 1913 was worth $1. Since 1913, it's now worth a nickel. So we turned a paper currency into a coin. So Bitcoin, on the other hand, like gold, is a permanent currency. It's a scarce asset. If you think about gold, for 5,000 years, it's a long time, 1 ounce buys a fine man's suit. Pretty good store of value. So Bitcoin is the digital version of gold, and it has all the aspects of gold, meaning it's a scarce asset. The new flow of newly created Bitcoin every year is low relative to its existing stock. And that stock to flow model says that scarce assets rise in value. They hold their value relative to fiat currencies, which can be printed at will. So over time, we believe that, today, the largest currency in the world is gold. Then you've got, the dollar, the next biggest at 1.7 trillion, then the renminbi, et cetera. Ultimately, we think Bitcoin gets equivalency to gold. So that's the $400,000 to $500,000 if it had that gold equivalency. Now, the $100,000 comes from the parabolic model of Metcalfe's law. Networks grow according to this Metcalfe's law. If you plot that parabolic growth curve, it said it should be about $10,000 in 2017, exactly what it hit. It says it should be about $100,000 in 2021, probably where it's going to hit, and then increasing from there. And I think people need to really think about, look, we have the highest wealth and income inequality in the history of our country. And it's worse than the Great Depression, worse than, during the Revolution. It's horrible. And the reason is because of this unfettered printing of currency. Since we went off the gold standard in 1971, the wealth gap has just soared. And that's because the top 10%, and really the top 1%, and really the top 1/10 of 1%, own all the assets. Think about, the price you paid for gas growing up. I mean, you're still young. So when I was growing up, a price a gallon of gas was 33 cents. Today, it's over $2. It's the same gallon of gas. It does the same thing. It's just less valuable or more expensive because the currency has been devalued. What Bitcoin does is because it has a fixed supply, it stops that. Same way with gold. Gold has a relatively fixed supply, meaning the new supply each year is basically offset by the amount that's lost or stolen or melted down. Bitcoin, same thing. Because we have this discipline of knowing we'll only ever have 21 million, we'll actually probably have closer to 16 or 17 million because some have gotten lost or disappeared through loss of hard drives or whatever. Ultimately, the hard money currency, right? The currency that can't be devalued by a central bank will preserve value and allow people to opt out of the system. Think about Venezuela, perfect example. So Venezuelans, right? They've seen their bolivar collapse in value, right? So they used to have money in the bank. That money's now worthless. Had they turned that fiat currency, those bolivars into Bitcoin, then the dictator couldn't have depreciated away their value and stolen all the money at the top. Dictator playbook. Zimbabwe, Venezuela, Weimar Germany, all these places, same thing happens. It's actually happened in the United States as we speak. Slower motion, but the same plan. Get the assets at the top. The average person doesn't own one share of stock. 49% of people in this country don't own a share of stock. They live on fixed income, right? Government assistance or fixed income investments. And every day that inflation goes up, they lose wealth. It's a wealth tax to the rich. It's, as I said, it's opt-out insurance. So it allows you to protect your assets from those authoritarian regimes. It allows you to have assets that are unseizable, unconfiscatable, off the grid, and that store value in real terms, meaning against whatever currency that the governments decide to devalue. So it can be preserving capital against the renminbi, it can preserve capital against the dollar, it can preserve capital against the peso or the bolivar. It doesn't really matter because it's a universal, global, borderless currency. No, actually, I actually think it's designed to do the opposite, right? It's designed to be deflationary, right? It's designed to protect against the inflating away of the value of the asset. Because no one, right? The Federal Reserve, a bunch of white guys with PhDs, get together and say, actually old white guys with PhDs, get together and say, we're going to do this to interest rates. We don't know what they're going to do. We have no transparency. We have no idea if they're being corrupted or bribed or they're doing the will or the bidding of the government. We know the math of Bitcoin. Think about this. The Bitcoin network's been up for 11 years. It's had hundreds of millions of transactions, not one fraudulent transaction, not one. How many times do you have to get a new Visa or MasterCard number because of fraud? Okay, lots. There's been no fraud. It's the most secure computing network on the planet. And that's because when you're designing something in computing, you have to choose speed or security. Bitcoin chose security. It is the most secure network on the planet.